Hello, everyone. Wednesday evening, 8 p.m. Eastern can only mean Taxes in Retirement Live. I am your host, Andy Panko. Thank you for joining me. As you've noticed, I was away the last couple of weeks, one on vacation and then one at a conference. So I'm sure you are all eagerly awaiting the return of Taxes in Retirement Live. And we got a great one for you. Drum roll, please. Special guest, Amy Colton, founder of Your Divorce Made Simple. Hey, Amy.
Hi there.
Thank you for joining. Super excited for this. Not necessarily a topic people look forward to, but we're going to be discussing financial planning around divorce and how things are different or unique or what you need to pay attention to with divorce planning. So thank you for joining. Before we get into it, let me just a bit of housekeeping here. So as always, this video is only general explanations and education. It is not specific tax, legal, or investment advice. Before considering acting on anything you see in this video, first consult with your tax, legal, or investment advisor, which neither Amy nor myself are. We are just two people here this evening talking about the delicious topic of divorce-related financial planning. Right. And Amy, before we formally get into it, I got this little bit I do with dad jokes. I did not tell them to you ahead of time because I want to see your reaction and how painful this is. All right. So I just spent $100 on a belt that doesn't fit. Huge waste. You know what I'm saying? Huge.
Oh, God.
You just got it. Okay, good.
Got
Good.
it. It's low.
Yeah, it took a while. It was a good one, though. That's how you know it's good. A man walks into the doctor's office, all panicked, says, "Doctor, I'm shrinking." The doctor replies, "Well, you're just going to have to learn to be a little patient."
Oh,
Right?
bad.
And finally, this one I say for last because it's kind of divorce related. My wife just broke up with me for being too un-American, but honestly, I saw it coming from a kilometer away.
Oh, God.
Right. I'm in the camp that I think we should be on the metric system. Now I know that makes me un-American, but it's just so logical and more sensible than the hodgepodge of crazy measurements we have. Anyway, all right. So Amy, again, you are the founder of Your Divorce Made Simple. Can you just tell us a little bit about yourself, what you do, kind of how you got into it, and we'll go from there?
So, first and foremost, I'm a financial advisor. But a number of years ago, at 5, I guess, to be almost exact, I decided I really wanted to work with women going through major life transitions. And probably the biggest major life transition is divorce.
Mm-hmm.
The second one is widowhood. And I do have a couple clients who are widows, but I started doing divorce because it is a very emotional time for a lot of people. And I didn't realize how important it is to use a financial advisor during the divorce process. And what happened for me is there was an attorney, a local attorney, who decided that divorce was too stressful for her, and she said to her clients, "Listen, if you can work things out with Amy, then you can come back to me and I'll file the paperwork." And when I started doing that, I worked with a number of clients, and I realized that by sitting down with them and talking about what each party wanted, and sometimes I work with a couple, and sometimes I just ended up working with one individual, as usually the wife. Not always, but it was mostly the wife. And I found that I could do two things. I could save them a lot of time, and I could save them a lot of money by not using an attorney. And then I would have her just draw up the paperwork, and I learned a lot in that process from my clients. In fact, one of the things that I've learned in the last 5 years, because I've been doing this 5 years now, is that there are no two divorces that are alike. Mm-hmm. And everybody's journey is a little different. So that was the first thing I learned, is that I could do this quicker, and I could do it less costly, because one of the things as a financial advisor, I charge a flat fee for the service. Okay. And the attorney charges an hourly fee. And if you think about it, if you hire an attorney, your husband's going to go hire an attorney. And now there are 4 people involved in scheduling and communicating. And your priorities are not the attorney's priorities. And so if you just think about it from that standpoint, it takes longer and it takes more and it takes more money, because every time you have to have a conversation, you have to go through the attorneys.
Right. So you were already an financial advisor slash planner, and then it was 5 years ago when you started this divorce focused, offering. Is that right?
Yeah.
Okay.
And so the first thing I did is I got my certification in divorce, which is the CDFA, Certified Divorce Financial Analyst.
Okay.
And then I decided, what happens and is that a lot of times you sit down and you start negotiating with both parties. You find out what's important to each party and you try to come to an agreement. And really, that's what the mediation process does. So I went ahead and I got my certification in mediation, and then I got it in family law mediation so that I could combine the financial planning process with the mediation
Right.
process.
So you are a divorce mediator and also a divorce focused financial advisor slash planner, right? So kind of
Right.
best of both worlds. Okay.
Yeah.
Got it.
And the other thing is that I realized in this journey is that really most people think when they're contemplating divorce that they need to hire an attorney. And they can do that, but that's going to be the most timely and most expensive route to go.
Mhm.
So what I try to do in my process is do as much of the negotiations and the much of the financial planning up front, and then bring in an attorney. And
Right.
sometimes I do it with the couple. If the couple's willing to come to the table, I call it the kitchen table divorce. We sit down, we talk about what's fair, what's important to each party, and try to come up with a plan. To me, when you're talking about division of assets, you're doing financial planning. And what better person to help you with financial planning than a financial person?
Right.
Not an attorney. An attorney knows the law. And
Right.
so, in my journey through this process, I've seen some attorneys make some big mistakes on their clients' behalf because they didn't understand the financial aspects.
And that's the case with a lot, not knocking attorneys by any means, but they know the law. They often don't know tax implications or even general financial investment, asset concepts. So that's a great, interesting point that you raise about that.
Yeah.
Um, Timely related question from Tanya. So people going through divorce may not have used a financial planner before, but don't know you could help with divorce. How do you let them know how you know you are out there for divorce?
Unfortunately, it's the biggest kept secret. I have really, built my business. Most of my business is through referrals.
Okay.
So a lot of times I get clients because somebody told them about me, or one of my ex-clients told them about me. And most people go, I didn't know people like you existed, you
Right.
know? And so what I'm trying to do, quite honestly, is change that. Because, like I say, most people think they need to start with an attorney, but I think you're better off starting with a financial person or a tax person, and then bring in the attorney later in the process. And I am going to write a book about this because I've got so many stories um, about I don't believe that the attorney is the best guide through the process.
Yeah.
And I'm going to give you, and I've got so many stories. I'm going to give you a couple stories where this really comes to light. So a guy called me in January, and he told me that he and his wife are getting divorced. They both have attorneys, and they can't agree on the division of assets. So the attorney has scheduled them to go to mediation.
Mhm.
And in my conversation with him, he also says to me that my wife and I just want to split everything 50-50. So I said to him, why are you going to mediation? Mediation is going to cost you about 6 grand. It's going to cost you about $6,000 because you have to go with your attorney. You
Mhm.
have to pay the mediator. And by the way, you're paying the attorney to sit there and do nothing while the mediator's doing all the work, but the attorney's going to insist he goes or she goes, and you got to pay her. So, and they charge a minimum of 4 to 8 hours. So if you look at paying 2 attorneys and a mediator, you're going to end up paying about $6,000 to do this. And you're not going to get anywhere because you already know you want to split assets 50-50. And that's all you're going to get out of mediation. The mediator is not going to help you how to split the assets. And the reason they couldn't figure it out is because there were a lot of tax implications in the division of assets, because the guy had a lot of RSUs and stock options. Each one had a different strike price.
Mm-hmm.
Each one had a different tax implication, whether it went to the husband or the wife. Okay. So there was a lot of complicated tax stuff that they couldn't figure out. The attorneys weren't going to figure out. The mediator wasn't going to figure it out. And they would have spent $6,000 and gotten nowhere. So fortunately, he stopped the mediation from happening. He hired me. I brought in a CPA because it was pretty complex tax from a tax standpoint. And we figured everything out in an hour and a half. But the point was, the attorney wasn't really bringing in the right resources to help this guy what he needed, and he was going to be spending money that he didn't need to spend.
Yeah. So now I assume that this plays out all over the country. So you're in Texas. You're based in Austin, correct?
Correct.
But do you work with people all over the country, or are you limited to certain states in what you do?
No, I work with people all over the country. Hey, I mean, like Texas is a community property state. Mm-hmm. New Jersey is an equitable distribution state. At the end of the day, they're both about what's fair. And really, when you talk about negotiation, you talk about what's important to each of the parties, and can we come to an agreement on what's fair? It doesn't, and sometimes, even though Texas is a community property state, sometimes the split is 60-40. I mean, it's not always 50-50.
Is it just based on what the parties mutually agree is fair? Is that
exactly? Exactly. And some people are more generous than others. Some people, and some people I want this, and I don't care about anything else. Yeah. So I work with attorneys. I work without attorneys, and I work with couples, and I work with individuals. It really depends on who's willing to come to the table. I have a client right now that they both started out with attorneys, and they own a business together. And so they were fighting over how to divide the business. And they both realized kind of early on, I mean, she came to me and she hired me, and I said to her, normally I try to do as much without attorneys as possible, but in your case, I think you need to hire an attorney, because her husband hired an attorney and he stopped paying her. She wasn't, not only was she part owner of the business, but she was an employee in the business. And so I said, I really think you need to hire an attorney because of your situation. Yeah. And then they both stopped because they realized they were spending so much money in attorney fees. I said, you know what? Let's schedule a mediation. Let's see what we can come up with, to see what we can come up with. And when I do mediation, it's very different than the other mediators in town do, because what they do in divorce, they put one party in one room and another party in another room. The two parties don't see anything, and the mediators go back and forth, and they explain the same thing to the husband they just explained to the wife. By the way, you're paying for that time because they charge hourly, and it's a waste of time and a waste of money. What I do, the process I do, and I call it the kitchen table divorce, is I sit both parties down at the table and we have a conversation. And when I sit down at the table, we can do it via Zoom, or we can do it in person.
It's harder to throw a punch over Zoom, right?
It's harder to throw a punch over Zoom. It's harder to know what other person's in the room too. But but anyways, you can do it.
Okay.
And the important thing is that you sit down and you talk about what's fair. And I have found that you can't always do it in one day. That's like
Yeah.
trying, sometimes people need to process this. Sometimes they need, to go home and talk to an attorney or their friends or whoever their support group is.
Hmm.
And I have found that 3 or 4 times coming back and forth to the table to discuss things works a lot better. And when I
Okay.
do the mediation, I don't have myself and the couple. I have a male. So if I have a male business partner, I'll bring him to the table. So there's 2 men and 2 women, and nobody feels like 2 of the women are ganging up on the guy.
Right. Okay. Makes sense. So, I have a few good questions here, but before we get to that, I just want to know. So, like, when does someone start this process? At what stage in the I don't think my relationship's going to make it with my spouse? How and when do they reach out to you or someone like you? Is it not until you've both decided, like, a dish was thrown against the wall, it's over, like, let me go call someone? Or is it, early stages, you kind of see you or someone like you on the sly from your spouse? Because,
I've
you
had
know,
every scenario in front of me. So even before I started doing this work, the lady came to me. She goes, I want to get divorced, and I want to know if I can afford it. Like, I had to help her
okay.
with the budget. I believe the earlier if you're even thinking about it, the earlier it's done. Now I have people come to me, and I tell them what I do, and they may not come back for 3-4 months because they're not
Yeah.
ready. Or, so there I think the earlier you start the process, the better, because I do believe that divorce planning is also financial planning. And so many people have never done financial planning, and they
Right.
could use, I mean, I've told people, whether you get divorced or not, you need a financial plan, you
Sure.
know? And so, as we believe in that, and it's just now you're taking a little twist on it, because now you're talking about what life is going to look like now, and what life is going to look like after the divorce. And that's
Yeah.
the other thing too. Um, I help these people go through the entire process. When the divorce is done, the attorney's done, but I'm still working because I need to make sure that when somebody gets assets, they know how to manage it. They're staying within their budget. They're not going to run out of money. I mean, I,
Hmm.
I had a case I worked on a couple of years ago where the woman was a stay-at-home mom, and so she hadn't worked in years, and she got $1 million out of the divorce proceeds. But given her lifestyle, if she continued the lifestyle she had before divorce, that $1 million would be gone pretty quickly. So it was
Yeah.
really important to help her manage what she got and live within her means
Yeah.
after the divorce.
So that's then kind of general financial planning, right? Just
Yeah.
so happens is post divorce. Okay.
Yeah.
So I definitely want to get into things that are different, things you have to watch out for, things that are unique to divorce, and I'm sure there's a boatload of them. Um, Before that, question from Dave Folts. I'm sure we've all, or many of us, have heard this term, gray divorce.
Yes.
Getting divorced in your 60s or whatever the cutoff is when you're gray, hence the name. I believe the baby boom generation has the largest divorce percentage of all the generations, or most increasing rate, or something along those lines. Any idea, statistics, or anecdotal evidence of what the reason is for the rise in gray divorce?
I only can speak only personally I can speak. I really believe that people have come to the point in their first of all, their kids are grown usually. A lot of times people will stay in a relationship for the kids' sake.
Hmm.
But when you look at gray divorce, a lot of times the kids are grown. It's not an issue anymore. I think the other thing that happens too is that people are looking, hey, I've got another 20, 30 years ahead of me. Do I want to spend it with this person? I've already
Yeah.
wasted this many years. I think that's the other part of the equation is they don't have to be, there's nothing holding them to stay there anymore, and they're looking at what the rest of my life's going to look like. And I have a personal friend who's going through that right now. She's
Okay.
She's in her 70s, and she doesn't want to be alone. I said, yeah, but do you want to spend the rest of your life with this person? Because you still got a good 20, 30 years.
Yeah.
So
Right.
I think that has something to do with it.
And Dave Folts, just my own sort of, what I've seen being affiliated with other groups and things I'm in is you both have your own life. Now, I guess it sort of ties in with growing apart to some extent, and the kids anchoring you together. But, let's say spouse A has worked and has been out of the house long hours for 40 years. Spouse B still may work, have his or her own life. You don't really see each other a lot. You see each other on the nights, maybe a little bit in the morning, on weekends, but you're running around with kids and life and whatever. Um, and then one or both of you retires, and it's like you have all this time together. You may find out, like, you know what? It's not that I dislike you, but this doesn't work. Like, I'm used to having my lunch with my friends or my social network or being away at work. Now we're around each other 10, 12 hours a day, and it's just, eh. So that can lead you to not want to spend the rest of your life with that person, even that's not the case, from the onset. So, it's an interesting animal. I wish I knew more and had a better understanding of like the sociological aspects of all this and emotional aspects of retirement and changes in life and things like that, because this is a huge part of it. A lot of factors all coming together, upon retirement, not in a good way necessarily. Okay, one more question for now. Is there such a thing as divorces for purposes of taxation, the legal way, of course? So I guess like functionally still being married and having a relationship with a person, but legally, technically divorcing?
That is so funny that you asked the question, because I had a friend come to me last week, and she said, she's living with this guy. They know they want to stay. This is kind of the opposite, but it's the same. It gets to the same point. Okay.
Mm-hmm.
She's living with a guy. She's been living with him for a while. Um, they they wanted to know from a tax standpoint, was it better to get married or better to just stay living together? Because everything right now is separate. So my answer to that is, you need to do financial planning. There's
Right.
no like quick answer
Right.
to answer that. Um, but there is a lot of tax issues that do come up during the divorce process.
Right.
And but I'm not really sure if I answered that question.
Yeah, sort of. And I'd sort of say the same. It depends. I mean, I guess there are scenarios out there where, sure, on paper, from your pure dollars and cents perspective, maybe it does make sense to divorce, just like there are cases where, yeah, it does make sense to marry. Like, one thing comes to mind, if nothing else: Social Security benefits, right? If you have a lifelong partner and you're not married, when you die, your benefits don't live on for that person and vice versa. If you marry, so long as you're married at least 12 months before one of you dies, well, guess what? Now there's this survivor benefit thing. So, not that that should cause someone to get married, but there are instances where there's purely financial or tax reasons to get married or divorce. I don't know of any that would prompt divorce off the top of my head, but I guess in theory there are. Yeah. Okay.
I can't think of anything that would prompt divorce from a tax standpoint.
Right. How you'd be better off by divorcing. Yeah. I don't know. Okay. So, generally speaking, and take this wherever you want to take it, but this group is a very astute bunch, really sharp about retirement planning, investments, taxation around IRAs, different investment accounts, Social Security, Medicare, whatever. We've never really talked about divorce at all. And divorce is a real thing. Gray divorce is a real thing. So it's probably more common than I'm aware of within the group. What's your words of wisdom, things to look out for, things that are different? What should people be aware of, whether they're going through a divorce or think they may at some point, to have on their radars?
Mm. Well, I think that, like I say, I think that they got to understand the tax ramifications of whatever the assets are they're dividing. So if you're, I'm going to give you, I'm going to give you a couple stories
Sure.
that kind of point to that. So I had a couple that was getting divorced, and they had a lot of equity in their house. And the woman was trying to decide if she wanted to buy the guy out, and she wanted to stay in the house and buy the guy out. And I said to her, I said, you just need to understand, that if you buy him out, if you guys sell the house today while you're married, because they had about 500,000 in equity in the house,
Okay.
your tax bill is zero. Okay, because you got the first 500,000 is written off.
Yep.
But if one of you buy the other out, and next year you decide to sell the house, your tax bill is 50 grand. And so you really need, because now you're single and you're selling the house and your write-off is only 250.
250. Okay. Yeah.
So, that's just something that you need to know those things when you're trying to figure out, because usually the marital house is the biggest asset that most people have.
Mm-hmm.
And it's really important to understand, if one person buys the other out and then they decide they're going to sell it, then they've got, because of their salaries, they have both were pretty high paying salaries. Her tax bill would be probably 50 grand. And she would say, oh, I should have done it last year when my tax bill would have been zero.
Yeah.
Because I was still married. So that's just one example. That's a fairly common example that could happen. The next example I'm going to give you is not so commonplace, but it happened. Okay. So this client was living in Texas and her husband was living in California.
Okay.
And she wanted to know where she should get divorced because Texas doesn't have alimony, but California does. And she'd been married 30 years. Well, I couldn't find anybody. I couldn't find anybody who practiced in both states. And I now realize why I couldn't, because those two states don't have reciprocity with any other state. You have to pass the bar in Texas and you have to pass the bar in California. And a lot of states will just, if you pass the bar in one of those states, will allow you to practice. But
Got it.
that's
Not those
true.
two.
Not those two. So I called a pretty high priced attorney in Beverly Hills, and I told him my situation because my client wants to know where she should file for divorce. And he said something to me that actually saved her a lot of money. Well, a very unique aspect of this relationship is she had not seen her husband in 10 years. Okay, she'd been married for 30 years and she was going after half his pension, but she hadn't seen him for 10 years. In California, and this is unique to California, the marriage ends when you stop having marital relationship. So she would have lost 10 years or a third of what she was going after the pension if she would have filed in California. So I told her to go ahead and file in Texas. And she did. And he did the same week. They hadn't seen each other in 10 years and they both filed for divorce the same week. Fortunately, she filed first. So they had to get divorced in Texas.
Why does that matter? Who files first is where the jurisdiction is?
Mm-hmm.
Okay. I didn't know that.
Yeah. In a case like that, whoever filed first takes precedence. So they ended up having to get divorced in Texas. And they tried to pull that California law, but they couldn't.
So I guess had the husband known and he got to it preemptively, he could have filed first and requested California.
He filed in California, and if his would have been first, she would not have been entitled to a third of what she was going.
Okay. So he did file in California, but she beat him to it. So her filing. Okay, got it. Oh wow.
And they had to have the divorce here. The divorce had to be here because she filed first. So I mean, that's a pretty unique situation. But when it comes to pensions, when it comes to any asset that's going to be sold and there's capital gains, I mean, those are all important, and obviously stock options. Those things require a lot of tax and financial analysis.
Right.
The other thing that can file that you need to file financial balance. Sometimes somebody thinks their money's being hidden, and so.
Okay. And I'm sorry. What do you do if you expect money's being hidden?
Well, I mean, sometimes that technically that has to come out or should come out during the discovery process or during the divorce process. And And if you find out if there was assets hidden after the divorce, you can go back. You can go back.
Okay, got it. This may be a silly question, but if both spouses live in the same state or domiciled same state, then you have to file in that state, right? You can't randomly choose some other state.
Well, you can.
Oh,
It's funny that you asked that question, because I once told a client, or a potential client, if you really want to do that, you better move out of Texas, because in Texas that's not going to fly. Well, she wanted to go after her husband for gambling debts, and I said,
okay,
well, in Texas that's not going to fly. There might be some other state you can move to, but generally you have to have lived in that other state for at least 6 months before you could file for, and so different states have different laws around that.
got it,
But you would have to physically move to another state and live there for a number of months, whatever the state required, if you were going to file in another
got it.
state.
So you can't just randomly choose another state for
You
the fun
can't
of it
just
because,
randomly choose another
okay,
state.
right, that makes sense. Is there anything unique to age by any chance? Not just stage of life. Like obviously, if kids are grown and independent, there's yeah, you don't have the child support issue thing, but just generally age. Any divorce considerations or rules or laws around
Not
being of a
really
certain age?
age, no, it wouldn't be really age, but the important thing is to know that if you're married for 10 years, that you don't remarry, you're entitled to half of your husband's social security, or vice versa, whichever is more. So if
Okay,
his half of his is more than yours, you can get that, but you have to have been married for 10 years and you can't get remarried. So
right.
that that may be an area where you don't want to get remarried for tax reasons or
Okay,
financial reasons anyway.
right. Yeah, if that benefit is large enough, sure.
And I once met a woman who'd been married for like 9 years and, 11 months or something, and she was really very upset that she didn't know that rule.
Yeah, I heard anecdotally same thing. Someone didn't know it, and it was literally like off by a day. And I heard it on a podcast, I think. So I'll assume it's true. But the lawyer wasn't aware of this, and the lawyer allowed them to sign the divorce decree. It was like 9 years, 11 months, and 20 something days shy. So they missed it by a few days, and the lawyer didn't know. Let them sign the decree. Now, anyone who knew that would have said, "Hold off. We're waiting 2 weeks to sign this thing,"
Right.
and would have got sizable amount of income from it in terms of this social security benefit. Um, what is the most effective way to protect premarital assets other than a prenuptial agreement? Is a prenuptial agreement even enforceable in all states?
That's another interesting question, because if you have a prenuptial, it's and the reason I say this, one of my clients came to me, and she this isn't she's not a divorce client, she's a financial planning client, but she had a daughter who's going to inherit substantial assets, and she asked me if her daughter needed a prenuptial agreement. And my answer was yes. Now, she asked the same question to the CPA, and the CPA said, no, you just need to document what the assets are. And so I went back to my client and I said, well, that's probably true if your daughter is living in Texas, but your daughter lives in California now, and who knows where she's going to be living if she ever gets divorced, where that's going to be. So
Yeah.
the answer really is a prenuptial agreement is a great thing to have. And most states, you'll be entitled to keep your premarital assets, but I would always recommend that you talk to an attorney. You can't guarantee that if you do a prenuptial in New Jersey and you end up getting divorced in Texas, that it will hold, but
Mm.
I think your chances are much greater. And I can't think of any situation in any state where they don't let premarital assets remain with the person, prior to marriage. So I
Got it.
think it's a good idea. But I can't, but I'm not a lawyer, so I'm not
Right.
going to be able to give you advice, legal
Sure.
advice.
Now, is there any rules of thumb So prenuptial agreements could be prickly things, right? I think we all know what they do. They sort of say, if we're getting married, these are my assets. If and when we get divorced, then these stay my assets. That's kind of the gist of it, right?
Right.
Um, Rules of thumb when someone should or may want to consider it. I mean, I assume if you have a lot of assets, your spouse doesn't. Maybe if you're getting married later in life, more so. But what again, not advice, but what do you tell or coach people about this?
I mean, I think it's prudent to get it, especially if you've got more significant amount of assets, or um or you are getting married later in life, and everybody's kind of established their
Yeah,
own, because you don't know if you don't know if you're going to be married for a year, or
right,
50
right.
years. You really don't. So I think it's a prudent thing to get. And you also, and the other thing that a lot of people don't realize is you can also do what's called a postnuptial agreement. So you can have like the same kind of agreement after you're married, to talk about when things are not shaky. But the important thing, and I think even more important than having a prenuptial agreement, is if you have premarital assets, that you do not commingle them during the marriage, because then it gets harder to keep them premarital.
And by commingle, and this was someone posted this: do not commingle assets, keep in your own name, and keep all proof and chain of custody. So commingling, is that just simply prior to me getting married, I have an individual brokerage account in my name. I get married. Um, Commingling means if I were to take these assets, transfer them into a joint account that I have with my spouse.
Yeah,
So do not do that. Okay.
yeah. I mean, you can, and I know we've done this. When we did the division of assets, there were like two retirement accounts. He had one, she had one, and they had them before they got married. They were both able to go back and say, "Hey, I had X amount in my account when I got married. That is not going to be divided between the couple."
Okay.
If you know what that is, I mean, I think the smart thing to do is just to keep it separate. But in most cases, if you know what the value was, even if I mean, you don't really commingle retirement accounts because they're
Right. Individual.
in the individual's names.
Yeah.
But where it gets tricky is, say you had a house that you bought before you got married, and now that's going to be your marital home, and you've both contributed to the mortgage. Now you've contributed to the house is appreciated. That's the kind of thing that probably should be talked about, or in a prenuptial agreement or a postnuptial agreement.
Okay. So this person was thinking the same thing, but with stocks. So will the post-marriage growth in a premarital stock portfolio be considered joint or individual? So I guess to your point, I mean, maybe slightly different because the people don't really use the stock portfolio, but I have an individual brokerage account with stocks in it. It's valued at $1 million the day I get married. During my marriage, it goes up to $2 million. Is that growth in any way considered now a commingled marital asset, or is that still all mine?
It's still, as long as you didn't commingle it, as long as you kept it separate, it is not.
Okay. But now the house, I bought a house all on my own before getting married. I get married. My spouse moves into the house with me. Start, jointly paying for some of the bills and the upkeep and whatever. Let's assume the house is fully paid for, so there's no mortgage. How does that get treated now?
Um,
It's still titled in my name, but we're both kind of splitting the costs of it as a married unit.
Again, I
Yeah.
would have a prenup.
Okay.
I
Just to
really
be
talk
clear.
about it,
Yeah.
because you still have the appreciation.
Right.
How's that split up? You have, even though there's no mortgage, but you're still commingling, expenses around the house. Um, it gets sticky once you commingle something. If you keep it separate, like the stock example, you keep
Yeah.
it
Right.
separate, it's in your name. Retirement account, you keep it separate, it's in your name. it's easier. But when you start commingling, and the same thing is true with inheritances. You inherit something while you're married. As long as you don't commingle it and you keep it separate, it's yours.
Yeah.
In most states would allow that.
Now, what would happen hypothetically? So let's assume I have a really large 401k or IRA. Point is, it's mine individually in my name. Get married for whatever reason. From the time I'm married going forward, my spouse and I don't create a lot of wealth, don't have a lot of income, whatever. Yet we're getting by in life for a handful of years. We divorce. My 401k is still the lion's share of our household assets, and that's all still mine. So upon the divorce, is my spouse not entitled to any of that 401k?
So what I've seen is that they know what that 401k was worth premarital.
Okay.
And they put that stake in the ground, and then whatever it's hard whatever it's worth now. Say it was worth 100,000 when you got married, and now it's worth $1 million. Chances are you're going to have to split the 900,000.
Okay. And is this
even though it's hard to say how much of that 100,000 grew,
right?
because you keep contributing more over the years, and that what your contributions are really marital assets.
Got it. So the contributions and growth thereon fundamentally are marital. Okay. Wow. Yeah, I can see how this gets complicated.
Yeah.
Okay. And just stepping back. So what's a post-nuptial agreement? I've heard the term, but realized as I was thinking about it, like, what is it?
It's the same as a prenuptial agreement, except that you do the document after you're married. So it's taking it. It's say I was, because this happened to me personally. I almost didn't get married because I was fighting with my husband to be about the prenuptial. So say you can't come to agreement and you get married because there's not enough time or whatever. And now you sit down, you have time, you're calm. I don't know, maybe you're a year into the marriage, and you say to your husband, we never did the prenup. I think we should do it now while we're still friendly and while we can talk about it and we're not under pressure and blah, blah, blah. I don't know. Okay. But it is essentially what you would do in a prenup. It's just that you do it after you're married.
Oh, okay. So not after the marriage is over.
No.
Got it. Okay.
It's saying, how are we going to divide our assets if we ever get divorced? And you do it while you're married. Not necessarily when you're contemplating divorce.
Sure. That makes sense. That's why I was lost. I was like, what's the point in putting the agreement in place after the fact? Because you were already at ends with each other. But
yeah.
Okay.
No.
Got it.
It's just important for people to know it's an option. That's all.
Right. It doesn't have to be before you actually
start. Right. Like, say you got married and now you think, I should have had a prenup and I didn't. You can go do that.
Yeah. Okay. General question from Mr. David Folts. What situations do you find most challenging when helping people through the divorce? I'm sure they're all challenging, but what's the most challenging?
I'll tell you that. Let's talk about what's not the most challenging. Okay. So, and that'll give you context on what is the most challenging. So if I can get the couple to sit down and talk about what they both want, that is the ideal situation, because you don't need attorneys to do that. Mm-hmm. It is a more, you can get that done quicker. You can do it more without spending so much money because you're not involving the attorneys, and you can do it more amicably. Now, the most challenging situation I ever had, and I either get hired by the couple or I get hired by the woman, but this particular situation, I got hired by the guy. And the guy told me it's going to be really easy. It's not going to take very much time, yada, yada, yada. It was the worst situation I've ever had, because the wife did not want to get divorced. Mm. He was willing to give her anything to get out of the divorce. She was getting a great deal, but because she was so emotional and and couldn't look at it realistic. It was really, really hard to go through the process with her. So that's the most difficult if you have somebody it is an emotional time.
Yeah.
Both parties are emotional, but if you've got somebody that's so emotional, they can't even talk to you, they can't even think reasonably, that's where it gets really difficult.
Now, as part of the mediation process, do you put on your psychiatrist hat? Like, do you have the chops to help talk them through that, and not say like, don't reprimand them like, hey, you're being dumb, this is a great deal, but do you sort of try to get the point across, like, I know this is difficult, etc., but this is a great
You try
offering.
as much as you can. In that particular situation, it was almost impossible. This woman was
Okay.
getting a really good deal, and she goes, "I just want to go to court." And that happens a lot where people go, "I just want to go to court." Well, they really don't want to go to court. They want to be heard, but they don't want to go to court because court is the most expensive route to
Yeah.
go. It is the most expensive route. I think it's really important too to understand all your options, all the different options that are out there when going through divorce. To understand that mediation is an option, and you don't
Yep.
need an attorney to go to mediation. Even if they didn't go to me, if they just went through another mediator, they don't need an attorney to do that.
Okay.
Um, so
And that's the same in every state, that's the case? Are there any states that
yes,
require a lawyer? Okay.
I'm pretty sure that's that is the that is true in every state.
Okay.
Now, in Texas, you can't go to court, and this might be unique to Texas. You can't go to court unless you've tried to mediate. In other
Oh,
words,
really?
a
Okay.
judge will not hear you unless you've at least tried to mediate.
Okay.
I don't think that's true in New Jersey. But the interesting thing, because I was doing a little research on New Jersey law, that's really interesting to me is that they try in New Jersey to get it done in a year, no longer than a year. I've had cases I've worked on that have lasted 2 years. Um, and
Why do they try, just for like all parties' sake, to not have it drag on, or is there some other reason, do you think, that they try to make
they
it
can't come
within a
to
year?
agreement. The couples can't come to an agreement
So,
on what.
like, what's New Jersey's, as an institution? What's New Jersey's reason for wanting to speed it up and not drag it out?
Oh,
Like, why try?
in that it's a that if these people have already decided that they don't want to be a couple anymore, let's get it over with. Let's
Okay.
let them get on with their life, which is
Yeah.
actually a good thing, I think.
Yeah.
Um,
Seems pragmatic. Yeah.
yeah, it's very pragmatic. So
Okay.
um, but I know that Texas doesn't have that at least goal.
Okay. Now, with people, even if they're amicable, they think they know what they want before they even come to a mediator, whether it's 50-50 or 70-30 or whatever. Um, let's assume they propose to you, here's exactly what we want, we're both in agreement. If you think it's not fair, or if there's other angles you think they're not aware of, do you bring that up? Like, for example, from what I understand, it's common that people will walk away house rich, cash poor. The house may be worth $1 million, so they may say, okay, I get the house, it's worth $1 million. You get the investments accounts, they're worth $1 million. We're good. Do you step in and be like, well, yeah, this house has a lot of expenses with it. Maybe you're not so good after all. Like, what's your
Well,
involvement with that?
I mean, I try to get people to be reasonable. First of all, if you're going to take the house, can you get a mortgage?
Hmm.
Are you going to be able to qualify on your own? I mean, that's usually the biggest thing.
Okay.
Like, can you qualify for that mortgage on your own without say that there's two incomes? Or even recently, I had a situation where the husband wanted to stay in the house, and I wasn't sure that he could. I was working in this particular case. I was the wife had hired me, and she had an attorney, and I wasn't sure that he could afford the mortgage because in Texas, homes have appreciated, especially this
Yeah.
year, like out of sight. I mean, out of sight. The home was worth $1 million more than like, I think they bought it for like 600 and now it's worth like 1.6.
In the Austin area?
Yeah.
Yeah. Okay.
Yeah, I mean, it's crazy. It's crazy. Um, and I mean, we went through a period this year where people would put their house on the market and they get 30 offers.
Yeah.
And they'd get offers that were 100,000 over asking, or all cash offers. And anyway, I wasn't sure he could qualify. Um, so that's the other thing. You've got to be reasonable. You got to hey, if the person wants the house and they can qualify, and the other party's okay with taking other assets, that's fine.
Yeah. So you're that voice of reason when they come to you with their
Yeah.
proposal. Okay, got it. That's
Yeah.
good.
I mean, a mediator technically is supposed to be neutral. And, you know, you, but I will tell you, because I've worked with a lot of different mediators, the mediators will also try to get them to agreement. And so sometimes they'll say, and mediators, most of the mediators in this town are ex-attorneys. So
Yeah.
they have a hard time kind of taking off their attorney hat when they're doing it. But technically you're supposed to be neutral.
The
And for the
attorney.
most part,
Yeah.
you can be, but that doesn't mean you can't say, "Hey, did you think about this, or did you think about this? If you do
Right.
this, X is going to happen," or something like that.
Yeah. Right. I guess that attorney hat makes them want to always feel like they have to fight for something or someone.
Yeah.
Yeah.
So,
Going back briefly to the thing again about the qualified and retirement accounts. So is it a good idea to create a new 401k or IRA? 401k may not be able to, but IRA after marriage so that it's clear that the contributions to these accounts are marital money from that point forward.
um, well, like you say, if it's a 401k and you're not going to be able to,
Yeah.
but in most situations, you're unless your employer allows you to do that, most situations you're going to have to keep the 401k the way it is. Um,
I mean, IRA, I guess you can, and maybe a little suspect if your spouse catches on, like, hey, you already have an IRA, why are you starting a new one?
yeah, I
But
don't
I
think you need to do that. I think you just need to know what the value was when you got married.
okay. Yeah, so snapshot of your statements or something.
Yeah. Or just, you know, make sure you keep the statement of
Right.
when you got married.
Yeah. Okay, cool. We're getting near top of the hour here. Any other comments, questions, parting words of wisdom before we wrap and tell people how to find you if they're interested in more? Something to look out for. I know divorce is weird, right? You don't want to tell people who are happily married to be like, yeah, you should start planning and thinking about these things. That's why I was kind of hesitant to ask you before our call, like, at what point should someone start considering divorce planning? Um, I guess for most people, you shouldn't enter a marriage thinking it'll ultimately end. But to your point, if you have a lot of assets or a later stage of life, it's probably not a bad idea to have that discussion with by way of a prenup or postnup.
Mm-hmm.
Anyway, I don't know. Yeah, I'm not sure where I'm going with that, but okay. Well, great discussion. Thank you. So for people who are interested, they can reach you at, give me a second here. Your Divorce Made Simple. Great name, by the way. Perfect. Perfect titling. And just to recap, so you're based in Austin, Texas. You do your combination financial planner / mediator, and you said it's a flat fee. Is it the same package for everyone, or does it depend on their needs, where they're at in their divorce, how complex their life is, etc.?
Well, there's 3 different packages, and they're based on how quickly, like my first package is a 6-month package.
Okay.
And then there's a package for a year, and there's a package for as long as it takes. So, um,
Okay.
and then there's also like what happens if you buy the 6-month package and you go longer than 6 months. So there's always add-ons, and there's
Got it.
add-ons, there's add-ons too, because if, say, for example, if there's a business evaluation that needs to be done, that's an additional fee. If I have to go to court as an expert witness, that's an additional fee. So the basic package is like a 6-month package, which includes the financial planning and the mediation as many times as you need.
Okay. So I don't know if it's on your website. I didn't look, honestly,
It is,
but are you comfortable saying, what your rate
yeah.
is? Okay.
So the rate for my 6-month fee is $5,000.
Okay. And that's, and to the extent that it extends beyond that, you can sort of tack on extra after that.
Yeah.
Okay. Great. Don't know who this is, but thank you. Widow and single, and still thought it was very interesting tonight. So
Well, thank you. I appreciate that.
yeah, and even for myself, I'm aware of some of the general things here, but I know it's an area of specialty that takes a different muscle and different set of expertise. So I'm glad, for you being willing and able to come on and share your time and knowledge and enlighten us all a little bit. Hopefully, a lot of us don't have to cross this bridge ever, but if and when we do, it's great to know there's people like you who can help simplify, really focus on what matters with the assets, save money, save time, save hassle by hopefully avoiding or minimizing lawyer usage. So thank you. All right. Cool. Well, thank you again, Amy Colton. Everyone, it was a pleasure. And just stick around after I kill the live. We'll just circle up afterward briefly. All right. Thank you all. Take care.
Thank you.